There we go. I gotta figure out how to do that transition, Mike. Go from the video and then just we're on the screen.
That's it. How's it going?
Good. Hey, so welcome to our today's event. Mike, why don't you go ahead and introduce yourself, sir? I think most people already know who I am.
So my name is Mike Hauser. I'm the National Sales Manager in Skyber. We are an insurance broker located in Doylestown, Pennsylvania, just north of Philadelphia. We kind of specialize in cyber liability insurance and then professional and cyber liability insurance for the MSP market, like yourself, Logan.
Nice. So we're going to be talking about cyber insurance today, Mike, and you're sort of our go-to guy because, as you know, insurance is a wild world, and I want to check what we're going to be telling our audience with an insurance professional by yourself. Topic of today, let's dive in. Are you cyber insurable? Like, are you insurable in the first place? That is a genuine question so let me ask you a question. If I asked that question to you 6 years ago, would the answer have been pretty much always yes? If I'd asked you 6 years ago?
Without a doubt. Not only that, there would be pretty limited, costs as far as premium, and then also pretty wide coverages 6 years ago in the cyber insurance world. Are you insurable by today's standards? Obviously, think a lot has changed over the course of the last 6 years. COVID being one of the major driving forces of changing the cyber landscape. So there's definitely more involved. Carriers are definitely taking a closer look at security measures the companies are taking, and how serious they're taking their risks, internally.
I think there are basically, and you can tell me if you agree or disagree with this, but I think you would agree. There's basically three established facts that dictate, well, not just cyber insurance, but all insurance, right? Standards change when the situation on the ground demands it. The insurance company, the carriers, determine those new standards. And when you get coverage, you either comply with the standards the carrier sets, or you just lose/don't get your coverage, right? Because at the end of the day, they set the tone and they set the agreement. All that sound right to you?
Exactly. And if you don't agree to the terms, like you said, you don't get coverage. But if you got coverage and you're not using something that you said you're going to be using, obviously there's been some pretty large cases that have been taken to court by the carriers to prove that the insured, in fact, was not using a certain measure of security that they claim they were on their application. So
we all know this picture, right? Your history dictates too going forward. I mean, I hate this happened. This happened to me more times than I care to admit. Every time I groan, not because I'm going to get a ticket, because I know I just got pulled over, and that's going to raise my insurance premiums because they're going to see me as a more risky driver down the road, right? It takes, I think, 7 years to come off your record. Past history, though, too, right? That can be a factor in getting insurance.
Oh, yes, without a doubt. I mean, a huge indicator on your premium in particular, obviously. If you do have a past history of claims, whatever type of insurance it may be, obviously it's going to affect your premium and then your insurability going forward, without a doubt. So
absolutely. And for those of you joining to us live online on LinkedIn or via our StreamYard, YouTube, welcome. Please feel free to post your questions in the chat. We'll be taking a pause throughout our presentation to answer anything that comes up. Mike here is a bit on the clock, so we're going to move a little quickly through our material. That being said, I will hang out as long as I need to answer any relevant questions. I just want to make sure we maximize your time, Mike.
Awesome. Great.
One of the cases I heard thrown around all the time, and it seems to be like the red herring almost of everyone who says cyber insurance doesn't work. This one. Right? Like everybody's talked about the ICS travelers and that whole settlement, how travelers sued ICS and won and didn't have to pay out because ICS did not follow travelers' guidelines. I am not here to say, and I think you would wholeheartedly agree, being a cyber insurance specialist, sir, that cyber insurance is not worth it. It is absolutely worth it. You should absolutely get it. But there is something called a standard of gross negligence. Right? I think that's what we're talking about here, right? There's making an honest mistake and there's gross negligence. The whole reason the whole ICS travelers thing fell through was basically travelers proved in court that by all accounts on the logic, ICS was grossly negligent. Am I wrong?
Exactly. And honestly, I quote that case. I mean, I haven't taken like a deep dive into into the details of that case in particular, but I bring it up fairly often because the client was not, using the measures that they said they were using according to their application, and ultimately Travelers won that case in court. So coming from you were talking about, oh, do I need cyber insurance? But so growing up, I lived in a household where my parents were often complaining about having a homeowner's policy. And no wonder I got into the insurance business, because my mom was always storming around the house growing. I can specifically remember going, "Oh, insurance, you have to have it, but you don't want to use, you're afraid to use it or whatever." And I get it, but unfortunately, the world that we live in now, currently, cyber insurance in particular has changed a lot in the last. And you referenced 6 years earlier. In the last 5 years, let's say. The fact that smaller businesses and mid-sized businesses are getting having a ransomware event or a breach or an interruption of service because of a cyber attack, the likelihood of that going up has gone hand in hand with the need for people to have cyber policies in place. And I get it. It's 5, 6, 10 years ago. People were not thinking about it. So
look at the stats from last year. I mean, 53% of small businesses were hit by some form of cyber attack in the past year, and that went up 5% from the previous year before. The previous year was 48%.
So when I do research online, a lot of times there's no shortage of statistical data to support the argument of having a cyber policy for just exactly what's on your screen right now. I mean, the likelihood of the thought of having over half of the companies having a cyber attack in the last year is it's mind-boggling, quite frankly.
It truly is. And here's the other thing about this, right? Like, why does that matter? Like, cool, half of companies got hit. Well, that's actually a fair point. I would say anyone who's not fully insured, like uninsured, and the stats bear this out, almost 1 in 2, right? If you don't have insurance for this, almost 1 in 2 small businesses never fully recover from that attack, right? Yeah. Like, this stuff can be absolutely mind-boggling, thank you, expensive.
And devastate your company. I mean, and a lot of, that's why I'm always kind of stressing too, to have in particular a standalone cyber policy. And I just kind of want to throw that in there because that's what I'm kind of talking about today.
Yeah.
Because there was a time, and I'm seeing less of it now, where a business owner's policy or a GL policy had some cyber coverage added to that policy. And I can't tell you how many policies I've had sent to me, and I've looked into it, and it's $25,000 or $50,000 or even $100,000 isn't going to get you very far by today's standards. So pretty much the baseline is $1 million, policy for your cyber coverage. I would say a standalone policy.
As being on the incident response side of things, I would say even more. I've seen it go up to 1.4, 1.5 in costs and expenses, because you have to remember that policy is not just covering your damages. That's covering all the legal stuff, all the breach investigation, the incident response teams. As someone who has an incident response team, I can tell you they're not cheap. They are every bit. Think lawyer rates. That's all I'm going to say. Think lawyer rates, right? So you're going to engage them for 100, 200 hours sometimes. So that all goes against your policy. You need to have adequate coverage so you can pay the bill for that and not be stuck within, okay, we covered this much and you owe the rest of this bill if you want this done, right?
Yep. I mean, the cost for breach response or remediation is just through the roof. It's astronomical nowadays.
I would say, honestly, it's the breach response and the incident response and all the legal notification actually outweighs by far any of the legal penalties you'll see from this, right? Like, it's just following the letter of the law. If you do it, the costs are pretty contained. It's like, oh, you got to pay $3,000 a year for credit monitoring kind of a deal, right? Okay, great. But you had to pay $150,000 to figure out whose credit you were monitoring with the breach investigation. And like, that's the kind of math we're seeing on the wall for a business of 5 people. Those numbers are referenced from an incident I got involved in where the business was 5 people large. That bill was $160,000, and they actually got off pretty light, in my opinion.
Yeah.
So let's talk about this for a second. This sounds really expensive, Mike. This sounds very expensive. And I remember a time, we mentioned this 6 years ago, where I could go down to my local brokerage, get $1 million worth of coverage for a very, very reasonable premium. I think I paid like $800 a year, right?
Yeah, probably less than $1,000.
Less than $1,000, and I had full coverage, right? And now, if I go down to my local brokerage, A, they might not even sell that policy. B, it's not at less than $1,000. What are some of the rates ranges you're seeing? And obviously, I get it varies case by
I
case.
mean,
But
it's driven typically by revenues
okay,
and employee count. But you know, it's kind of driven by revenue, so it's kind of hard to put a dollar amount. But that the policy that you're speaking of 5 years ago of being less than $1,000, that ship has actually sailed, quite frankly. And to tell you the truth, because of those huge losses they were taking,
let's talk about
um,
that.
they've sublimited certain areas of a policy, and that's something that I always kind of point out when I'm in a quoting process. You know, social engineering, um, client funds, invoice manipulation, funds transfer fraud. A lot of times are sublimit to $250,000 or maybe even $100,000, depending on the carrier, and then they'll increase the actual deductible in those areas as well, which is basically just a way of stripping more
Well, let's
coverages in
talk
those
about that then,
areas.
right? They were seeing, I mean, it was pretty profitable 2016, I'd say, those, even though we were only seeing sub $1,000 premiums. I mean, you saw carrier loss ratios in 2016 of around 67%. That's actually not too shabby, right? As far as
No,
the carrier profitability. Then 2020 came, and you mentioned COVID and all this other fun stuff, right? Things changed.
sent a lot of people home, and companies weren't ready for them to be home.
And you saw all of a sudden, I felt like almost out of the blue, carriers were getting slapped from sitting on a 67% carrier loss ratio where they're taking home 37% of that premium and go, oh, yeah, where we go to, oh, gosh, we're taking 114% losses on every policy we sell. That is not great.
Sustainable.
That puts most businesses out, right? Like that's
exactly.
where they were at.
There was quite obviously there was definitely going to be an adjustment made once you get over that magic line that you had in that last slide. So
Mm-hmm.
but lo and behold, I feel like there's been a little bit more of a leveling off of the market recently. Probably in the last 12 to 18
It
months.
feels like they hit a bit of an equilibrium. That's what it felt like to me. Like
Exactly.
they finally found the line and they're slowly dialing it back a
I
tiny
feel
bit.
like they kind of had a better understanding of
Yeah.
the market early on.
Well,
The
how
risk
did
wasn't so high, and they didn't have to have a huge understanding of the market. And then, like you said, 2019, 2020, things changed drastically. So
and this is how they responded. For those of you who've never done cyber insurance before, as Mike was alluding to earlier, the policies are written completely different than they used to be. There are sublimits, which means certain kinds of activities have less than the aggregate coverage. One of the most common ones I see, Mike, and you can tell me if I'm wrong or right on this as the insurance expert, I see sublimits with financial fraud as a great example. You might have $1 million aggregate, but you only have a 100,000 $250,000 sublimit for financial fraud that they
social
very much.
engineering,
Yeah.
financial fraud, cyber crime, invoice manipulation, they'll have a cap of 250 or $100,000. And like I said earlier, they'll adjust the deductibles up in those areas as well, which is basically just stripping,
Yeah, I mean,
the risk they're taking on their end. So
credit where credit's due too. They're profitable too, and that was it was needed. It looks like because now we see their profitability has gone up 45%. And to be clear, I'm not demonizing them for that. I want a world where cyber insurance is actually a viable business model because I need to transfer that risk.
Yeah, exactly, and that's exactly what we always talk about when we're on calls. That's what insurance is, to transfer the risk.
And we need a working cyber insurance market, right? And so the audience is probably asking right now, and I think it's a fair ask, what does this mean for me, right? Well, I think we answered one question. You're gonna pay more for your premium, guys. I'm sorry if you had cyber insurance 10 years ago and you're expecting premiums to that level. It's just not a thing. That's, as Mike said, ship sailed, right, Mike?
Yeah, exactly. But I also like to point out. I mean, listen, I sell cyber insurance, so
Sure.
It's easy for me to say. But when I'm looking at applications every day, multiple applications from multiple verticals, in all over the country, and a lot of times, I actually have been in this business for 3 years. I came from a construction background into this business, so but a lot of times, or even early on, I would look at it just in the sense of, okay, well, this company is this size revenues, and this is what their cyber coverages for the year.
Yeah.
And have they gone up? Yes. I mean, do we all want to go back to 2015? Yes. But in my mind, I would look at them a lot of times, a quote, and say, wow, if I had a business with this amount of revenue, this is really kind of a no-brainer.
It's appropriate. And that's what I'm saying is I think it was always underpriced, to be honest with you, in the grand scheme of things. Like the risk ratio, it materialized with COVID at an escalated path, right? It was always going to get here sooner or later. COVID just sped up the timeline by, 5, 6, 7 years, basically, is what I saw that. And so what that means for a lot of people, though, is they're left in a lurch because they didn't have that, 7-year progression of, I got to get used to the new standards, the new risk models, the new what is my responsibility versus the carrier's responsibility, et cetera, et cetera, et cetera. And what I found is a lot of people are setting out cyber insurance applications and they need a certain level of coverage. Great example of this. They have a contractual obligation for a very specific kind of insurance, right? $2 million aggregate needs full coverage. Well, you and I both know when we get those applications, the carrier reasonably is going to ask, hey, we want to see some basic risk management inside of your company for this, right? Like we're not a blank check. While we are here to transfer your risk, you need to do like a minimum standard of care, things like vulnerability management, things like, managed detection and response, like these tools and technologies that a lot of companies are like, I've never heard of this stuff. I've never had to use this stuff. Why is this a thing? And what that's done is it's made the market, I won't say it's harder. I probably should rework the slide. I'll make it smarter. Let's say it's a smarter market, right? Like the carriers want to work with people who are serious about their risk. They want to work with people, yes, that understand the importance of what they're doing, but they also, like in the case of ICS, don't want to work with someone who is just expecting the carrier to expect to pick up the entire bill when gross companies aren't doing the bare minimum.
Exactly. I mean, obviously, yes, the carriers are definitely looking more closely at their clients, for coverage in those areas. And like you said, the security measures are only increasing, year after year. So
yeah, and I think it's a reasonable, like, for example, I drive a car and I'm driving with the DUI and I get in a catastrophic car accident, right? Like there's a really reasonable shot that claim's going to get denied for gross negligence reasons, right? Like the carrier said, look, we assumed you were a normal human being with regular cognitive skills and you were heavily impaired. That is not a risk we were prepared to take on, and nor should they, right? Like, that's what we're talking about when we say gross negligence, I think.
Exactly.
Right? Similar concept.
And you talked something about there. I want to kind of go back. You talked about the contract requirements. Yeah. I definitely run into more and more pharmaceutical healthcare companies requiring $5 million limits. Believe it or not, I've seen $10 million limits requests come through. And there's really zero chance of finding someone to write a whole $10 million. It's actually limited to find someone to write the whole $5 million. A lot of times you have to stack kind of like a tower of multiple carriers on it. And I have had some luck with clients, MSPs in particular in the past, where they were able to take my quote, which it gets very pricey when you're talking $10 million limits. Take my quote and was able to negotiate, the terms down to maybe $3 million limits or something along those lines, because they just, the cost of the policy was so high, they would have to even question whether or not it was worth the business they were going to get from it. So
we've seen multiple biotech and pharmaceutical companies come across, and all of a sudden in their investor contracts, right? Like before they're getting their checks, and they need those, right? Like they need the money because in the beginning, especially in those companies, they have no revenues, they have no profit. They're still developing the thing they're going to sell. And the investors are very clear. You must maintain this level of insurance because they know, based on statistics, a cyber attack can absolutely wipe out the short-term value of that company and cause long-term ramifications. And they want to make sure that if something bad happens, it makes sense that there's some money there for them to recover in the event it happens. Like we've seen that happen. And so people are probably wondering, okay, we mentioned a lot of stuff. What exactly are carriers mostly expecting businesses to do? I mean, here's a quick list for those of you who are wondering what carriers are expecting out of businesses, right? They want to see some tools and technologies and some proper policy in place for just managing and making sure you're doing things right. Things like if you have an office, an actual firewall, no more using the Spectrum router.
Yeah.
Having multi-factor authentication turned on all your key accounts. Making sure you're not throwing out privacy protected information like PII, right? You're not just sharing it all over the internet. You're training people how to recognize a phishing email, using good passwords, et cetera, et cetera, et cetera. And they also want to make sure that you're staying on top. I would say this, I've seen this more and more. some form of risk assessment. I'm seeing more of, whether it's penetration tests, some kind of risk analysis. They want to see that every year you're looking at the situation on the ground and saying, okay, how can we be proactive within the realms of our means? I've been seeing more and more of that. Does that all line up with what you're seeing?
Yeah, without a doubt. It's funny that firewall that at 8 years ago, that's all you needed was a firewall. Pretty much, that was the only question. So, but now
Yeah.
it's endpoint detection, MFA, and MFA being turned on, not just having it.
Oh yeah,
Actually,
that's I think was a key point in the ICS court case was, hey, you didn't turn it on. You said you had it, but you didn't turn it on. We meant it
I
was
think
turned
that's what it
on,
was.
right?
I think that I'm
Yeah.
pretty sure that's what that was.
Nobody checked to
And
make sure
and
the
I
button was
get it.
toggled.
Like, I'll be the first one to let you know that. Listen, I'll be the first one to complain when we have MFA and to get the certain carriers website, or if I have to. I think we use Salesforce internally, and we have MFA now. We have to log on with our phone and everything. So,
Yeah.
and listen, I'll be the first one to tell you I complain. I complain as much as the next guy, but we all know in the end we're much better off with having that technology.
And it's the digital equivalent of putting on a seatbelt, right? Making sure you drive a car with good safety standards.
It took a while to turn us all to wearing seatbelts regular, all the time like I do now. But
we don't. I hate wearing seatbelts. I'll be honest with you. I always think they're uncomfortable, but I do it because I know it's a necessity. It's a bare minimum standard, and
exactly.
I know probably, if I'm being honest with myself, at some point it's going to save my life. Like that's.
And I'm 53, so I remember when no one wore a seatbelt, and then gradually, and now everyone wears a seatbelt pretty much.
I'm going to ask this too. I think it's important for our audience to understand when they attest on those warranties, right? We're going to talk about that for a second. The warranty, right? The application we're testing, we have this stuff. It's important to track it and make sure that you can prove that you're doing things, right? Because one of the first things I've seen instant response is, okay, they should have these things according to the warranty, right? You don't want to explain to the carrier why you said you had something on a form and then come time to make a claim. Oh, you actually don't have the thing, or it's not properly turned on. And I'm not saying they're going to deny you on the drop of a hat, but it's important. And honestly, in my experience, it's sped up claim times when you can show, no, we have this, this, and this. It's ready to go. Here's the evidence. Have a nice day, Mr. Carrier. Let us know what we need to do next, right?
Yeah.
You need to, it's not just checking a box on a warranty. You need to have some kind of proof ready to go in case the carrier actually ever says, hey, show us that you're doing what you're telling us you're doing, right?
Without a doubt. I have this conversation because the fact that I deal with MSPs and then their clients as well. I have these conversations all the time because their clients, a lot of times they're going to bring those applications to their IT people or their MSP like yourself. And they're going to want to know, and I'm always stressing, if you say, yes, you have it and you're using it, make sure you have it and you're using it.
You can prove that you're using it, and you actually are checking once in a while. Hey, for a great example, MFA. You can turn that off if you know what you're doing.
Yeah.
And so one of the things I had to do once is I checked the box on a warranty that said, hey, you have MFA for a client. And then I checked 6 months later because we were doing like a routine risk assessment for them. We're like, wait, it's turned off. I have documentation. We turned this on. What happened? Oh, Mr. IT guy in the corner. Some of our users didn't like that, so we turned it off. And I'm like, you can't do that. You're going to jeopardize your claim if that happens, right? Like you need to.
Without a doubt.
People are people, and I love people. I'm a people person. People are a double-edged sword. They're your greatest strength, but sometimes people do, and anyone who's been a business owner or an executive business knows this. Some people do dumb things for no explainable reasons. It's just inexplicable. And you have to kind of have safety rails to make sure that's not going on in your organization. One of the things I like to do, and we're a huge proponent of, and full disclaimer, we do offer as a service, but we're not biased in any means. There's plenty of great organizations that can do this for you. We believe in third-party risk assessments for cyber stuff. Why? When you're in your own business day in and day out, you naturally develop blind spots. Even if you're a very savvy business executive and you have a good idea what's going on the technology side, you're usually not your full job if you're an executive at a small business. And more importantly, I have blind spots. I know I do with my own business. I do risk assessments that are third party, and I find out and I go, oh yeah, I guess I never thought of that, right? Mm-hmm. A periodic third party risk assessment kind of helps check yourself, right? Make sure that there's nothing big or some kind of gap in your security or your policy that's going to open you up to I say this, and you can tell me if you agree with this. I say we need cyber insurance, but it always should be our last line of defense, because the claims get expensive.
Yeah, we always refer to it as the cyber insurance policy is the backstop, basically.
It's the backstop. That's a great. I love that
After
because
the pitch gets past the pest catcher, which is essentially, we'll call that the cyber breach, for argument's sake. And then we always kind of view the last line of defense, like you said, that the backstop is the cyber insurance policy. So,
and that's what I'm getting at with here, right? Like, there's something called deductible on every insurance policy. Go read your policy. I have one. I'm sure every policy has one.
yep.
A lot of people don't realize this for a cyber claim, and you can verify me here. A lot of times, a breach isn't just one claim; it can be multiple claims, right? And you're paying that deductible just for that alone. Like, if you want to save yourself, I think someone was telling me the other day, a different cyber insurance brokerage, on average, when there's a full blown breach, like a cyber attack breach, he sees an average of about 9 claims being triggered against the policy.
Wow.
At least in his experience. And I was like, that was staggering to me. I was like, really? He's like, yeah, no, on average, I see about at the deductibles around $2,000. They're going to trigger that sucker about, $18,000 worth of premium or not premium, what do you call it? Deductible, just to get that going, right? Like, you don't want that to be your only line of defense if something happens. So we're going to, I know you're almost at time here, Mike.
Yeah. So and then one thing I wanted to touch upon is on when I get back quotes, and we're a broker, so I typically will get back 5 to upwards of 9 quotes from all A to A++ rated carriers. There's usually a line item on there. It's breach response outside the limit. So basically what that means is the costs, to investigate that breach and the response to that breach will not erode your aggregate of your policy. So it's almost like an additional $1 million coverage of breach response, the cost associated with that. And not, a lot of times maybe half the carriers have that, half of them don't. Another area in particular is the ransomware payment or extortion payment. Some carriers will reimburse you. Some carriers will pay on your behalf.
And that's becoming a legal gray area. There's a lot of push on the powers that be just to outlaw it altogether.
I know. And I'm always like, I would much rather have someone pay on my behalf than have to wait for someone to pay me after I paid the ransomware. So, so definitely little intricacies of each carrier, and having a broker that's well versed in the cyber insurance world is definitely a good idea to reach out to someone like myself. So,
and that's actually where I'm going to go out here. So we have a special offer today. 2 offers, really. One, which is we are doing an initial free. This is a self-performed risk assessment. It is not the full-blown cybersecurity risk assessment we were talking about earlier. This is a quick, I want to call it like a spot check, right? Like a spot check, real quick. Hey, do we have like the common things that we should have in our organization ready to go? How do we score? It's an easy 20-question little thing, yes or no. You score yourself. All do it on your own steam. For anyone who's interested, they can scan this QR code and it'll take you straight there. It asks you for an email address so we can email it to you, and you can go ahead and do this. There's no strings, no cost, nothing attached. The other thing, though, I think, and I before I speak out of turn, because I didn't run this by you before we did this presentation, is if anybody wants their cyber policy reviewed or wants to talk to you about getting a cyber policy, how would they get a hold of you? How would that work?
So my email is mikeh@inskyber.com, and it's INSKYBER. I look at policies all day long, so I'd be happy to assist anyone with adding coverage, or if someone says, hey, I'm renewing, or someone says, hey, I'm unsure if I have the proper coverage in place, send me your policy, reach out to me. On my signature, I'll have there's a link where you can set up a call if you wanted to have a call with it. But as you can imagine, I go cross-eyed by the end of the day, reading policies and pouring through them.
So if somebody wants to, I put your email address on the chat. Anybody wants you to look at the policy, make sure that they're covered. And I assume you're just good. Like Mike, I know you. You're a good guy. Mike is our broker, guys. We love Mike. Mike, if they go through and you say, hey, they have a good policy, you're more than happy to tell them that, right? Your goal is to educate.
Listen, I can't tell you how many times I've talked to MSPs or their client who's an accountant or an attorney's office or any vertical, and I said, hey, listen, this is a good policy, this is a good price, stay where you are, I'll reach out, next year at renewal time just to see, if you're getting hit with a big increase or something. But other than that, stay with, the carrier that you have, or that's a carrier that we use, quite frankly, often. So it happens a lot of times. I mean, most of the time I'm just looking at to see if I can get you better coverage at a better price, quite frankly. And that's what, people are after these days for sure. So
Fantastic. Well, I believe we were at time, Mike. I'm going to go ahead and exit us here real quick. My name is Logan Edmonds. I'm CEO of TTS. Go ahead, Mike. Introduce yourself one last time.
Mike Hauser from in Skyber, and it's Mike H at Skyber.com. And like Logan said, I'm always available to review anything or help with adding a policy. So
stay safe out there, guys. Stay aware. And as always, don't hesitate to reach out to us. This recording will be available for the next 3 days on LinkedIn and YouTube. So take care.
Have a great week.